All right, what's up, guys? Hope everybody's doing well. We are officially live. Hope you guys are excited for a brand new month. It is the first, so we have obviously wrapped up January now, and yeah, it's been a really good start to the year for sure. As far as the markets have been, obviously we've seen a lot of volatility with, uh, Trump, whole thing going on with the world. So Um, yeah, it's been a very active market, to say the least, to start the year. And this week we have a lot of high impact news. We got NFP week. Yeah, just like red folders across the board almost every single day. So you guys can see it will be a very eventful week. We actually have Monday, Tuesday, and Wednesday 10 a.m. news. So, if you guys trade with me live on Akashx, um, I usually stream at 10 a.m. and I look for my signature strategy to kind of start around that time as well. So yeah, that's gonna be influential for sure throughout the week this week, as far as even Friday. Even Friday. So that's literally 4 out of the 5 days that we have 10 a.m. news. I don't even remember the last time that happened. That's actually pretty crazy. I don't remember the last time we had that many days have 10 a.m. news. So that's going to be definitely something to make adjustments with this week. At the end of the day, when it comes to 10 a.m., I'm expecting some type of manipulation and then our strategy to activate. So this will either, it's going to be a couple of things that happens with this. If we get news at 10 a.m. all these days, either we're going to have some really banger setups where news is just going to help us kind of speed things along, or we're going to have kind of like a rockier week as far as the strategy goes. Now, how we perform is going to be based how we manage our stops and the trade management and all that stuff once we're in an opportunity. But yeah, this is going to be an interesting week to kind of like study when it's all said and done, as far as like how news at 10 a.m. affects our strategy specifically. Because once it, like, we'll probably get like one day out of the week that has like 10 a.m. news, maybe two, right? But 4 out of the 5 days, that's like very, it's almost every day. So we're gonna get a lot of data off that to see like, hey, when we get 10 a.m. news, what's the win rate? How does that affect our trade? Honestly, the only thing that could be a real negative out of everything is just less trading, which is not even so bad. And I say it because you never know if, like, let's say we have a bullish bias and we're waiting for a bearish manipulation before we actually get into buys. And price just kind of like 10 a.m. hits and it just goes straight into the direction we want it to go to. That's kind of like when we are forced to not take any trades, even though our direction is correct. That's the only thing that maybe I could see being a downside. But at the end of the day, like, not taking trades or taking break evens is always better than taking losses. So all good. But we'll see. Again, this is all literally just me, like, just thinking off the top of my head. This is the third Sunday in a row as well where we get like a pretty strong spike at open, because like literally the last 2 weeks we had a very strong new week open gap. Now we already see that Nasdaq has pushed like 200 points already. 200 points. First 15 minutes of market open. So it's doing it again. And they've all been bearish too. Like it's always like the last 3 weeks have opened where we get like a strong drop. Now this low that we have right here from January 25th, it sits inside of this 5-minute fair value gap. 30-minute fair value gap. Which is a pretty, like, I've had this zone marked off for a little bit, as well as this low, just because like liquidity is very obvious sometimes, where you have like these obvious lows and highs, like this, and then this big wick. I mean, you could just clearly see that was a big manipulation. I believe this was from market open. So this is actually exactly a week ago, Sunday market open, where Price opened here and just literally did this huge drop, ended up recovering throughout Asia, and then New York session, we ended up getting like a big bullish move. But this big candle happened last Sunday, and now we're seeing the same thing happening here. And I think Sunday before was here, and we got the same thing. So that's 1, 2, 3 Sundays in a row with like those big drops at the open. So that's interesting. That just shows there's a lot of like news that's going on over the weekend that's impacting things. I mean, the real headline stuff this weekend has been crypto, to be honest, because we've been seeing Bitcoin sitting at 76 now. All the cryptos obviously following suit as well, so that's kind of taking the cake. But like I said, January news-wise has been very volatile. Now, whenever we get these strong drops, if we actually look at the last 3 weeks, so 3 weeks ago we had that big drop. Sometimes people expect an immediate recovery. You don't always get that. I mean, you see literally here on the 18th, price drops, keeps going down, and then eventually on the 21st, so like 3 days later on Wednesday, is where we get like that big shift to the upside, and then that's where we basically have recovered the Sunday drop. So this one took about like 3 days for us to kind of like get back to that gap. Last week though, it was quite the opposite. We literally recovered we hit it at 1 a.m. So it took about 7 hours. So we had a drop, and then 7 hours later we were recovering back above that price. So now we'll see how this goes. Again, this can either take days and then reverse, or it could literally be kind of like last week where maybe price just wants to tap in to take that low and react off this fair value gap and we recover. But yeah, I would just say like in the grand scheme of where we're at in this entire picture, we're starting to head into like lower price territory. This is something that I talk about once in a while. If I see an obvious range that we're floating in, I'll look at the low, which is down here, and then we have the high all the way up here. Let me actually scrunch it up a little bit more because I know my camera's probably blocking there. So yeah, from this low to this high, this is kind of like the range that we're dealing with right now. And so if we actually pull up a fib from the low all the way to the high up here, I know sometimes people want to look at like the percentage retracements like for entries. Like I'm not doing it for this purpose. I just want to see what type of range, like what part of the range we're in. And I can kind of eyeball it when you kind of like know about that for a while, but just to like have a tool to actually see what I'm talking about, I'll look at this range in 3 parts. So like an upper third, middle third, and lower third, right? So you just look at the low, look at the high, right? And you can see that basically the top third are this line and this line, and then the bottom third is this line and this line. And so the idea is if you're obviously in a higher part of a range, you always hear like buy low, sell high, right? So this is kind of like the high side of the range. This is where we're more like I would be feeling better about sell setups when you feel like you've been very overextended on price. Like if we're here and we keep climbing, and at some point price is gonna have to slow down a bit. And so when you start seeing that like price pulling back and then breaking structure and all that, then you can really look at the range and be like, okay, price came up into this upper side of the range as a pullback, right? Like for example, you break out, you come back into that upper part of the range. There's probably people that were looking for buys up here, but again, if you're looking at this entire range, the probabilities are more in favor of trying to like get back down than to actually keep pushing from here. So yeah, same thing goes for like the bottom side of it. So if we look at the bottom third of the range, it's basically here now, right? So from here to the low, this is kind of like, I guess you could say buy territory, right? Where if I'm gonna take any trades, I would rather look for buys in this area to take us back up to, at least somewhere in the middle or back up to the upper part of the range. But again, that's just kind of like letting you know where you're at in general overall in price. It's not to say, oh yeah, buy now. Like I don't use this as a strategy to enter the market. I just kind of use it to make sure I can see the bigger picture. I know if I'm higher, if I'm low in price, and then that will help me kind of maybe form a bias. So if I'm lower in the part of the range and I know that we have a gap here that just formed, I'm gonna be more inclined to want to look for buys to kind of push things up. Now I have two things that are already like telling me to do so, or like making me feel more confident about buying than I would selling. So yeah, it's not that you can't sell here, because ultimately, even though we're in this range, price may be looking to take this low and completely shift structure and keep going lower. At that point, we would have a different range, you know. But assuming that we're gonna kind of stay in this general range for now, then yeah, I would say this is more buy territory down here. And so yeah, that's kind of my thoughts. Just looking at Nasdaq from a higher time frame perspective. Every time I do market outlooks, I'm not really looking at taking a trade or entering right now, or looking too much at like the 1 minute or 5 minute like I usually would when we're live trading throughout the week, because on Sunday I'm just trying to get a recap of kind of like where we are and how we got here, right? And so if I even zoom out a little bit more as well, we've already kind of talked about that 1 hour 30-minute kind of flow where we're understanding this is the extreme low and the extreme high of the structure we're currently in, right? And then if we look at what are some other important things that we're looking at on this chart, we're looking at liquidity. So I can tell you guys, like, look at all these highs from here, from here, from here. People will call it support or resistance. You can call it whatever you want. I don't really use that terminology or think about the markets in terms of support and resistance anymore, since like my first 2 years trading. But it's a key level at the end of the day, right? I mean, you can see that buyers tried holding here a long time ago, and then it turned into resist. Excuse me. Turned into like a Jesus. Turned into like a resistance, and then we came up, same thing, rejected from the level, came up, rejected from the level. So we've been rejecting this general price point of let's give it a number, 25,800. If I had to give it like a clean whole number, I would say like 25,800, at least on this chart that you're seeing here. I know it's going to be a little bit different on maybe your broker or whatever, but I can just see that this is a very important level. Right? And so, yeah, I mean, this last push that we had, you can see it kind of just took out all of the people that were maybe selling early or whatever. And now we've kind of worked our way back down. So the way I see it is we were very close to all-time highs and we didn't quite get there. But that's also leaving a lot of liquidity. People will call this like a double top, right? Again, terminology will always kind of change with different traders and stuff, but ultimately, I just know that stock market in general is always going to make new highs at some point. People have a lot of money invested in this. People's retirements are in stock markets. So I do eventually expect us to go hit all-time highs again, as we do year after year for the most part, unless we have like a financial crisis. It's obviously early in the year as well. But yeah, it's either going to go to all-time highs, or we're going to be looking at the next, sell side liquidity, right? So for example, if I'm expecting price to go up, this is going to be where, I want to exit trades, or like where I want to target buys to move to, okay? So we have this, and then we also have the all-time high up here, right? So those are buy side targets, and then you have sell side targets. So if I have like a bullish mentality, I'm gonna want to be looking at trades where, if I'm swing trading or at least trying to see how far I can hold something, then this is where ultimately I can expect price to go. There's no other data in history to go off of. This is all like outer space right now. You know what I mean? But these highs are all the information we have of where price has gone before. So those are my like upside targets here. And then as far as sell side, if price, let's say doesn't want to make all-time highs, and we're gonna kind of just halt here and start a huge downtrend now, then okay, fine. We'll kind of see and make those adjustments. But basically, this low would be the first target for sure, and then you got like this low right here, and then ultimately you have this low down here. So these are like you just want to look at the most obvious highs and lows, and I'm looking at it on like a 4-hour chart, right? So on the 4-hour, you can see these are all of the important, sell side targets if we were to actually see the market want to keep dropping. Now, obviously, the further we have as a target, the more ambitious of a target it is, and the less likely it could go there. But like if price starts to run through this zone or whatever, it's very likely that it hits this. And this low is not very far off. So if it hits this, it'll probably hit that as well. Again, we don't know. Price is always going to gravitate towards liquidity and then push away from it. So price can do a couple things. Price could take this low and then turn around. Price could take this low, maybe give a reaction, then take this low and then turn around. Or price can go take this low, take that low, flow around, and then eventually come down here. Like we don't know which low is going to be like the bottom of price. That's why you just kind of speculate, prepare yourself for those different scenarios, and then you got to filter out, what are the confirmations or what other things are we looking for to decide whether we should be focused on buying, selling, where are we holding to. And these are just like the high time frame targets. And again, once we jump into like a 5-minute chart, a 1-minute chart, 15-minute chart, and we start looking Monday through Friday for like London high, London low, Asia high, Asia low, like that's our intraday targets. And those are things that you kind of can only see in the moment when we're actually trading on the sessions. But on a Sunday night, it's the best time to kind of like zoom out, see where you're at overall, where are the big, higher time frame highs and lows, and then just wait for our session to roll around and see how like London session has developed, Asian session. And yeah, so again, right now my number one focus, just kind of zooming back in, is this low here and the fair value gap, seeing how it reacts around there. And then you have like the new week opening price here that's kind of forming that gap to start the week. So those are the two things that are going to kind of like pull price for the meantime. We're going to be pulled to this direction to fill this. And then at some point, this new week open gap price is going to be what pulls the market up. So yeah, pretty much summarizes everything. Again, in the world of cryptos, things have been like catastrophic for people that have been holding positions. I have not really been holding any cryptos, like literally at all, for a while. Like I don't think I've actually held on to any cryptos in, when did XRP hit like all-time highs? XRP had hit these highs this is September. Yeah, it makes sense. So this was September. Well, this is July. Oh no, hold on. Yeah, this is like September. So around, it was somewhere around here during this push where I exited at like 2 something. I could have made more, if we would have held to like all-time highs. I probably should have held to all-time highs, obviously, in hindsight. But I mean, I was in at like in the 40s, almost 50 cents, somewhere around there. And then we exited at around like 2 something. So that was a really nice like 4x plus play that I had on XRP. And literally since then, I haven't really put anything in cryptos. I've been talking about XRP to $1 since we hit all-time highs. There's people that get very like excited and emotional, especially in crypto. I don't know. I feel like there's usually less seasoned people in the markets that get the most excited about things like crypto. And they just like swear that, oh, we broke all-time highs, it's time for XRP to go to $10. And it's like, all the stuff I teach you guys about liquidity when it comes to NASDAQ, you can apply that to gold, you can apply that to stocks, you can apply that to cryptos. It doesn't matter. At the end of the day, price goes to inefficiencies and liquidity. You can see it on every single chart, every single asset. It's not like a gimmicky strategy. It's not even a strategy. I just feel like it's the way the market actually moves, you know? Like these candles are formed a specific way where you have an open, high, low, and close. And if you study candles, you will notice that like things come about, like gaps or imbalances, fair value gaps, right? And so when I see a weekly, not a daily, not a 4 hour, not a 1 hour, a weekly fair value gap this big that just pumps. That was like the candle that kind of started the pump all the way to all-time highs. Dude, like it like I don't ever like to say it will, because at the end of the day I don't control the market, so I can't guarantee anything. I always try to make sure that that's very clear with people, as I don't guarantee or know anything. But like I've traded smart money concepts for years, and no matter what I trade, like if there's a fair value gap that's very significant and price has also kind of halted and shown a difficulty to continue higher, especially after taking like some type of important liquidity like a previous all-time high, like it's very normal for price to come back down to this. And that's $1 to about 62 cents, somewhere in that vicinity. So like if I wanted to invest in XRP, I would say like my dad asks me and I'm like, dude, don't get it at $1.60. Personally, I would get it at $1 or below, you know. If you want a dollar cost average your positions in, okay, whatever, you know. And at the end of the day, I'm very sure that price can go here, but after it does, I don't know if it's gonna keep going to 40 cents. You know, like I don't know that. For all I know, price is gonna wanna go and take all of this liquidity here and drop down here. Like I don't know that. All I know is I'm not trying to buy anywhere above $1 or $2, just because there's a lot of imbalance and liquidity down here, and I'd rather just wait. So that's what I've been basically looking at for everything else. Even Ethereum, you can see the same thing. Previous all-time highs get hit at 5,000. Everybody's jumping and screaming for joy, and that's super cool. You get me? Like I'm happy for people, but if you don't cash out around all-time highs, I feel like you missed an opportunity to secure the bag. And if your plan is to wait 10-15 years for all of this to be irrelevant anyways, then that's totally cool, you know. I mean, it's just about what is your plan, you know. Personally, I've never been the type to like hold a crypto with my eyes closed forever, unless you're like very early into something like Bitcoin. And I mean, you could argue that 76,000 is very early into Bitcoin, but I mean, it's hard for me because I was in that Bitcoin at 3K. So to see it at 76, like, I don't know, it doesn't seem so low to me. You get me? But I'm not gonna pretend to be like a crypto super expert that like watches the news and studies crypto people all day, because I'm not. But charts don't lie, and you know, there's things like liquidity and fair value gaps that I do see that work across all types of asset classes, and I just feel like, you know, it's showing itself again. So I would not be surprised whatsoever, like to see Ethereum continue as well to break all this and get back under $700-800. You know, if you tell me I can get XRP at $1 or below, yeah, I can get Ethereum under $1,000. I can get Bitcoin under like 60 or 50. Like now we're back in the territory where I'm like, all right, cool. Same thing with Solana. You know, like Solana, you can see huge fair value gaps after we took out an all-time high. Like it does it on every single chart. I mean, it's just common sense. You know, there was people that had all-time highs, price pushes to it, people exit positions, and now money's coming back down. So yeah, Solana is something that we'll probably see come down under $70, $79 and below. I honestly, I think it's gonna come down to like the 40s. But again, I don't really have these conversations much because, man, I rarely look at crypto nowadays unless I know like we're heading into like some, you know, different type of territory where you know, things are like really, really, really low in price. But right now I just feel like we're finally seeing price move faster. to the downside, which is what I expected. So yeah, I would say like the time for buying cryptos is, I mean, we don't know how fast we're gonna get this drop, but just prepare over this year maybe. Like, again, I don't know about cycles, I don't know about timing. I just know about areas on a chart, and however long it takes for us to get down into these discounted areas, like this is where I like Solana, you know, 50 and below. Get it back up to $250, $300, that's a 5x from $50 to 300. You know what I mean? So if you tell me you want to load up here, cool. If you want to load up at $1 or less on XRP, cool. Like, but for the last almost, my God, this was literally a year ago. A year ago on January is when we hit all-time highs on Solana. So basically for an entire year, we kind of did a whole lot of nothing, you know? Versus like silver, gold, like it was their time to shine. So different sectors are going to take off at different times. Had a question here. What indicator are you using for the 4-hour candle? It's called the ICT HTF candles by Fadi. I'll show you here. This one, ICT HTF candles by FADI. And you can customize that to be 1-hour candles, 4-hour, 30-minute. Like you can literally put whatever you want. I just personally put the 4-hour candle because that's like the highest time frame for me that's very relevant from an intraday trading perspective that I like to have, especially for trading Liberty X that I do on my sessions, where I'll be looking at you know, like the 6 a.m. 4-hour candle, and then using power of 3 concepts at 10 a.m. For trading NASDAQ. That's kind of like the thing that I do on session. Other than trading like the inverse fair value gap stuff that I've been doing lately as well. But yeah, that's the indicator for it. You just gotta have a purpose for it. You know, if you understand how to use the higher time frames with the smaller time frames, then it makes sense to have that indicator. I mean, even if you just want to use it to kind of like not forget what the higher time frame looks like, then that works too. But yeah, the way I use it is for power of 3, which I describe on the sessions and stuff. If you all right, so yeah, this week, if you guys are not familiar with the schedule that I do when I trade on Akashex, tomorrow is in Spanish at 11 a.m. Eastern, and then Tuesday, Wednesday, Thursdays I stream at 10 a.m. Eastern. Tuesday nights I do those free calls with Arabella and Preston and Maddie, where we have been doing giveaways, and then we'll live scalp the Asia session. I know Preston kind of focuses on US 30. I'll do NASDAQ. Arabella does gold, and gold moves really nice during Asia. So Arabella's been crushing it on those. Last session though, I actually had a crazy trade that you had to have held it though over, I think, to like one, actually like it was like we started calling that trade around like 10 something, and then it hit like 10 to 1 around like 1 something a.m. It was this trade. See the media here. This one. So on the session, what? Yeah, on the session, this is where the trade was. So we were trading inverse fair value gap stuff that I you know, I've been doing it more on New York, but it works on these sessions as well. But yeah, this one hit like 2 to 1 while we were on the actual you know, like call. And then once we ended the call around like, I don't know if it was 11 something, it took like another hour and change. And so at 1 a.m. we had like that one candle that just freaking flew like a lot. So yeah, I know most people for sure would have exited like at around 3 to 1, which is where we had the final targets. I did not expect that rest of the move for sure. But yeah, that was the last one we called on last Tuesday, which was crazy. Power 3, please remind me I had a long break from Akashics and rejoined now. Okay, so the best thing you could do if you're trying to understand that stuff is a couple things. So if you're in Akashics, you go to the website, just log in. And then if we go to live sessions, you go to the live sessions and just look for my sessions for the recorded. And you can literally go through, I would say, like all of January and December and even November, but really like January alone is very valuable. So just go through the last month of live session replays, and I show it on here like every session. Like literally, I explain it pretty in depth every session. And then also, if you are in Akashics, you should be in this chat, like the Akashics official chat, where we post like, all the educators post their stuff. Um, and I always have the PDFs on here. So you'll see Liberty X is the name of the strategy, right? And then this is Power of 3 explained on that PDF. It shows you examples of a bullish and bearish scenario. And then I show examples of the strategy for both buys and sells, the indicators, all that stuff. So between the PDF and watching the last month of live sessions and then getting on the live sessions, if you're able to attend them in real time, that's how you're going to learn it the best for sure. A recap of this week. I mean, dude, honestly, there was so many setups this week that I could be here forever. Honestly, what I tell people is sometime, like, I mean, there's really no exact time you have to do it, but I don't know, for me, like on the weekends that I've been doing this for so long, I kind of like to purposefully get away completely from anything trading related as much as possible, just to kind of like have that 2.5 days, like Friday afternoon, Saturday, Sunday, to just literally kind of like chill and not look at anything, so that by Sunday night when I do this and I head into the week, I don't know, I feel like I have like a healthy like enthusiasm to kind of get back into it. But when I was really hungrier, like in the beginning to learn, and like I wasn't so burnt out as much, um I would say like back testing, whether you do it on Fridays, Saturdays, Sundays, or even throughout the week, like anytime you can, obviously outside of your trading time, like you should go in the week and recap, because I can do weekly recaps, and you can literally look at every week. Sometimes I'll do that. I'll look at the last setups and stuff like that. Um, but I think the best thing for anybody to do is every single week, whatever you trade, if you have like something you specialize in, like trading just NASDAQ or gold or whatever, you should always recap the week and like look at all the trades you took, the ones you missed, where trades you could have held for longer, trades you should have closed earlier. Like, just you have to do that review of what you saw, what you see, what happened. I feel like that is gonna be just as valuable, if not more, than me showing you stuff or me talking to you guys. That can only do so much. Like you can watch a million games of football or basketball or soccer or whatever, and if you want to become a player, like watching the game actually will help you understand the game from afar, but when you're actually playing the game yourself, it's a whole different world. So you got to know very intimately what it feels like to like go in trading view, back test, go in trading view, look at previous setups, like do the work. You got to do the work. So yeah, last week, I mean, look, I've been trading the inverse fair value gap stuff plus Liberty X here and there. So there's a lot of setups I could cover, honestly. Like my amount of trades taken since I started trading inverse fair value gaps in between Liberty X setups has increased the amount of trades that I take on a weekly basis a lot. So I do like have to use a smaller risk, and it's a lot to kind of like go over. But Liberty X, obviously, there's only really like 1 or 2 setups max per day, and not even every single day there's a setup. So it just depends like what models you're gonna be focusing on the most or looking at. But yeah, but either way, whether you traded inverse fair value gaps or whether you traded Liberty X, there was a lot of good setups. All right, so yeah, throughout the sessions as well in the week, I usually recap some stuff, but yeah, so all right, that pretty much sums up everything mainly that I wanted to talk about. We did kind of react already to that fair value gap zone that I was telling you guys. We didn't quite take that low, which that's kind of suspicious to me, to be quite honest with you. I feel like now we're just building up even more liquidity in here, so maybe we run that again. Who knows? But overall, we definitely are in a momentum that is bearish. And so we would need some significant type of reversal criteria to look for buys again. But yeah, I just feel like we gotta let Asia play out, let London play out, and then kind of just see where we're at heading into New York session tomorrow. And yeah, so tomorrow we have 10 a.m. news. There's nothing really much before that matters. So literally last week, the better days for me was when you lost scalping. There. Well, it just depends what fair value gaps you're talking about. I mean, I definitely lose trades for sure. As far as like live trades that I call out on a session or on the chat, I mean, for the most part, most of them are always hitting. If it honestly, the biggest thing though is how you trade manage, because the way I would trade manage on Liberty X setups is not really as aggressive as I would when I'm trading inverse fair value gaps. So like if I go back to last week, where's Monday? Is it the 22nd? No, it's too far back. 25th. It's Monday. So on Monday with Liberty X, this was a setup that we had that went into profit. It ran for about a 1-to-1, came back to break even, and I think it ended up taking off afterwards. This one, I said if we can stay below this inverse fair value gap, I'd like to see a NAS sell here with 20-point stop loss. It never stayed below that. Like after that candle, it kind of shot up. So it just depends, man. Like I'm not gonna pretend like every single trade I send wins, because it doesn't. But the win rate for January for me has been extremely high. The only thing is, if I hit like TP1 or 2 and I go break even, and then you don't move stops to break even, like that's where a difference is gonna come in results. Trade management is always gonna be, no matter who you follow, whether it's another educator in Akashex or even just somebody you see on Instagram or YouTube or whatever. Like the way that you handle your account on a setup with where you move your stop loss, where you get in, where you get out, it's gonna be always slightly different from every single person. So personally, I'm not the type of person, like as an educator, where my main focus or value point is signals or like trying to give you guys trades. Even though like I do it because in a way, like kind of like an obligation of mine, right? Being an educator for Akashex, it's part of my contract. It's part of what I do is I'll call different trades. But at the end of the day, my main thing is for people to understand why I take the trades I take. And again, I'll have a trade that goes for a 2-to-1, and then somebody's looking for it to go 3-to-1, and they don't close the trade. I close 2%, they close out break even, And that's going to happen probably over and over the course of a week, a month, 2 months. And so those decisions kind of compound, whether you manage the trade correctly or not. And those are things you have to kind of take note of every single day and week. If you're not keeping track of how many trades go somewhere and then turn around, like some people's issue is they close trades too early, and then some people's issue is that they don't move stop loss up fast enough, right? And so if you're not paying attention to the patterns that you're seeing happen to you, then you're going to probably keep doing the same thing over and over until eventually you hit your head enough times for you to make a change. And And honestly, what happens to people is like they might have a good strategy, but the way that they're managing the position is not. They haven't optimized their execution, and so they'll go jump to a different strategy. At the end of the day, you can jump strategies 50 times, but each strategy is going to call for a way to trade manage either more aggressively, less aggressively, and those are the little details that add up. Um, Gold. Again, I don't really trade gold, guys. I'm gonna be honest. Like, it's not something I even pay attention to. Like for day trading, we have so many people that trade gold in Akashex as it is as well. Like between Arabella and Joel alone, I mean, my goodness, it's like so many freaking trades that get called out that it's actually overwhelming. And that's not even all the educators. You know, you got Abid, Joseph, you got Nick, FX Edge. Like there's a lot of people trading gold, especially when it's a hot market. So my whole thing is like, you know, you just have to understand like what are you looking like? What are your concepts? Like, what do you look for? What is it that you're like? How do you trade? You know, and so the same way that I look at liquidity or the way I look at, you know, fair value gaps and all that stuff, it does not change at all just because it goes from Nasdaq to gold. So all the stuff that you'll see me talk about is the same thing you could use too. You know. Now I have a very specific thing that I do with Nasdaq because I just feel like I know how Nasdaq moves better because it's all I trade. But you can look at stuff here where you have you know, liquidity sweeps, inverse fair value gaps. I mean, my God, like you can trade something a million different ways all you want. You just gotta kind of know what concepts are the ones you're gonna stick to. You know, are you gonna trade liquidity, fair value gaps? Are you gonna trade support and resistance? Are you gonna use indicators? You know, so like if I were to just do like an analysis right now of Nasdaq, I already told you like, okay, we have all these lows that are bunched up over here. That's also a fair value gap that formed there. You know, and this is the same thing you'll see on any chart. So for now, I would say, you know, obviously there's a big bearish momentum. You know, if price takes that low and then kind of bottoms out, maybe we start to get a little bit of a recovery. I don't know. Like, again, I don't look at gold or trade gold. So if I were to give you an analysis right now, it's kind of mean. It's kind of like there's no point because I'm not gonna follow up with it. I'm not gonna take a trade later. But for example, if I want to look at trading inverse fair value gaps, and I'll be like, okay, you know, there's this fair value gap here that's bearish on gold on the 15-minute time frame. The way I trade, like if I'm gonna trade inverse fair value gaps, is I want to see some type of reversal or liquidity sweep or something that indicates the market might turn around. So for example, you know, we have like these lows here. If hypothetically price were to like take out these lows and then price comes and starts to close above this fair value gap, that is now an inverse fair value gap. And I can go and take like buys off of there. This would be like 100-point stop loss. And then maybe you try to target like a 2-to-1. You know, again, this is just literally me just on the fly, just coming up with a trade out of nowhere. But that's if you're somebody that trades inverse fair value gaps. Some people know what that is, some people don't, some people trade it, some people don't. So there's a million and one ways to analyze anything at any given moment, depending on what concepts you believe in and what you apply and study. So yeah, I just stick to Nasdaq basically, and we look for the same stuff every single day, trade that and avoid the rest, and see what the market brings. Really it. One day will I separate from Akashex? I mean, I don't know. I don't have no plans for that. Life changes all the time, though, you know. But I love Akashex. I love the people. I love everybody who's been here from day one, and we've built something really special here. So makes no sense for me to do my own thing, to be honest. Um, yeah, we're just in a really good place. We actually are gonna be doing weekly events, I think, here in Miami for a while, and then we have a really good. We're gonna have a really cool event in March, and then we're on a cruise in March as well. So it's like the middle of March. So there's just a lot to look forward to. Why I don't trade gold? Not that I have anything against gold. It's just you don't need like I don't need to because I find plenty of opportunity with Nasdaq. You know, at the end of the day, you gotta have a plan. Like for me, it's just easier to always be on point when I'm focused on one thing. So if I start analyzing gold and Nasdaq and this and that, I'm kind of splitting my attention a couple different ways. And some people, maybe for their strategy or way of trading, like it works for them. You know, maybe because they're not scalping or like they're swing trading, and so they get very few opportunities per week, and so they have a bigger watch list to take advantage of different assets. But I can basically almost guarantee it. I can find a trade almost every day, Monday through Friday, with just Nasdaq. So if that's the case, then I just gotta triple down my focus on an asset that I like, that fits my schedule, that fits like what I look for, and then just run that up, you know? So again, investing and day trading are two different things though, because I can buy gold, for example, like physical gold or ETFs on gold or something like that, and take advantage of certain investments. But dude, at the end of the day, there's money everywhere all the time. And you cannot grab every dollar in every single place at the same time. That's just what it is, you know? That's why if you have an investing portfolio and you want to diversify, that's something, I guess, slightly different where you might have some money again in like physical or like ETF versions of investing into gold, silver, Bitcoin, index funds, yada yada, you know? It could be even so many other things like sneakers, trading cards. You know, like you always want to buy something for a low price and sell it for higher. I mean, that's basically what investing is. But when you're looking at day trading, where I can buy, sell, and I can find a lot of positions, again, like the same way you can make more money, you can lose more money as well. If you take a lot of trades and they're not very well thought out, they're not like A plus setups, um, and you don't know when to like just call it a day, you can find yourself doing too much. Again, there's not one right. There's literally no one thing that is right or the only way. It's just like your personal experience of what works for you. And this is mine. You know, like I've had times where years ago I've had like a watch list of 10 to 20 forex pairs at the same time, and half of them never got used, and it was just kind of like, I don't know, like I just naturally, if you just keep going, you're gonna find what makes sense for you. For some people it's many pairs, for some people it's one. For some people it's trading X strategy, for other people it's this. But you won't know unless you just literally keep going. You have to just literally watch a video, take a trade, make some money, lose some money, and naturally I feel like you're just gonna find magically like your path. Can you trade NAS with 200? It depends on your broker. For the most part, most brokers, that's probably not enough. Like it's pushing it because Nasdaq is pretty volatile. So, you know, sometimes your stop loss on that broker, like if you trade my strategy, will be like a $30 to $50 loss. So that's like a pretty good chunk of your account if you have $200. You know, it depends. Some brokers offer like the minis or the micros or whatever for Nasdaq, and so maybe like a 30 to 50 point stop loss, which is what I usually use with Liberty X, might be a $3 or a $5 loss. That's if like they have the lot sizes fixed for micros instead of minis or whatever. So it depends. It really just depends where you trade. I haven't been trading personal accounts like that just because the United States with like forex brokers has been pretty crazy over the past year and change. But I think like the futures wave is something that I've, you know, gotten on that's just really clean with zero spreads. And yeah, like somebody said in the chat, you know, if you can understand prop firms, the risk, like the return on investment with doing prop firms the right way is just kind of unbeatable, man. Like if you understand prop firms and you can stack up enough in different places, you know, the money you spend into getting those accounts to what you can get out in payouts, it's ridiculous. You know, you just gotta know, you gotta play the game the right way. You know, you gotta know how to play with the drawdown rules and making sure you don't violate some conditions that, you know, will have you like banned or cause you to like get a denied payout. You know, like obviously the prop firm stuff is not perfect, and there are going to be people that, you know, again, you get banned, you get denied a payout if you do certain things. But usually, if you just play by the rules and you don't try to become a multimillionaire in 1 month by risking a crazy amount on your prop firms, like if you just play the game with consistent trading and stacking up enough accounts in enough places, you can find yourself having a good relationship with prop firms for an extended period of time. And you can make a really good income that you can use to build a personal account to trade in a regulated broker or, you know, in futures or whatever. And then you can, again, trade personal accounts that are more meaningful. So yeah, I would say like for now, most people's routes that I think people should be taking is just getting consistent, kind of understanding what's your strategy, your way, and then trying to stack up a bunch of futures funded accounts and you know, play that game. You know, play the game of rotating funded accounts, or even if you want to use a trade copier. But at the end of the day, you got to master one prop firm challenge first before you stack multiple, especially across different firms. So everything has its evolution, but you just got to, you know where you're at, be real with where you're at, and then just grow, like grow into the bigger accounts, grow into more accounts when the time is right. And you'll know because you got funded, you're keeping the account, you're not giving it away a week later, you're not, you know, doing stupid trades that are costing you big drawdowns. Like you're just consistent. You know, that's the biggest thing. If you can find yourself in a place where you're like consistent and flowing, from there it's just about maintaining that state of mind and then scaling it. So easier said than done, but that's the game we play every single day. So all right, I'm gonna head up out of here. Appreciate you guys for tapping in as always. I will see you guys on the sessions in Akashex. So yeah, appreciate y'all. I'll catch y'all on the next one, and have a great week. All right, it's a great new month as well. Peace out, guys. Appreciate y'all.